You know what's fascinating? Right now, as you're watching this, there's a quiet panic happening in the halls of central banks around the world. Not the kind of panic you see on the news, not the kind that makes headlines, but the kind that shows up in their actions. The kind that reveals itself in what they're buying when they think nobody's watching. And what they're buying is gold. Lots of it. More than they've bought in decades. Let me paint you a picture of what's really happening right now in the global financial system, because once you see it, you can't unsee it. And more importantly, once you understand it, you'll know exactly why holding paper money right now might be the riskiest thing you can do. Central banks just completed one of the largest gold buying sprees in modern history. We're talking about institutions that literally print money, choosing to exchange that money for physical gold at a pace we haven't seen since the early 70s. Think about that for a second. The people who create currency are dumping it for metal. What do they know that you don't? Here's where it gets interesting. The official numbers show central banks added over 600 tons of gold to their reserves in a single year. But here's the thing. Those are just the official numbers. There's another category called unreported purchases. That's even larger. Somebody's buying massive amounts of gold and not telling anyone about it. When the people who control the money supply start hiding their gold purchases, that should tell you something. Let's talk about what paper money actually is. I want you to really think about this. That dollar bill in your wallet, what is it? It's a piece of paper with ink on it. That's the physical reality. But we've all agreed to pretend it has value. We've all agreed to this collective hallucination that these pieces of paper represent wealth, and for a long time, that agreement held. But here's the problem. The people who print that paper have been printing a lot of it, an absolutely staggering amount of it. In the past few years, the money supply expanded faster than at any point in peacetime history. They created more dollars in a shorter period than most people can even comprehend. And every single time they create a new dollar, every dollar you already own becomes worth a little bit less. It's not complicated math. More of something means each unit is worth less. But here's what they don't tell you. This isn't an accident. This is the plan. See, governments have figured out something clever. They've figured out that they can pay their debts with money that's worth less than when they borrowed it. They borrow $1 today, and they pay it back with $1 tomorrow that buys half as much. It's genius, really. Except for one small problem, you're the one getting robbed. Every dollar you save, every dollar in your bank account, every dollar in your retirement account, it's slowly being drained of its purchasing power. Not by some external force, not by some market crash, but by design, by the very people who promise to protect the value of that currency. Now, let me show you something that'll make this crystal clear. Go back to the early 70s. A gallon of gas cost about 36 cents. A new car was around $3,000. A house, you could buy a decent house for under $30,000. Now, fast forward to today. That same gallon of gas is over $3. That car is $40,000. That house is $400,000 or more in many places. Did the gas change? Did the car change? Did the house change? No. The money changed. The dollar changed. It lost over 95% of its purchasing power. That's not inflation. That's not market forces. That's your wealth being systematically transferred away from you through the debasement of currency. But here's where the story gets really interesting. There's one asset that's been around for 5,000 years that's maintained its value through every currency collapse, every empire's fall, every financial crisis: gold. And right now, gold is telling us something very important about what's coming next. Look at what gold has done recently. It broke through every resistance level that analysts said was impossible. It shattered records that stood for years, and it did it while most people weren't even paying attention. While everyone was distracted by stocks and crypto and real estate, gold quietly climbed to levels that would have seemed absurd just a few years ago. But here's what's really fascinating. It's not retail investors driving this. It's not small buyers. It's the big players, the central banks, the sovereign wealth funds, the people who have access to information you and I will never see. They're loading up on physical gold like there's no tomorrow. China's been buying gold every single month for years now. Russia converted a huge portion of its reserves to gold before recent geopolitical events. India's been accumulating. Turkey's been accumulating. Even countries you wouldn't expect are quietly building their gold reserves. Why? What do they see coming? Let me tell you a story about a man named Paul Volcker. In the late 70s, early 80s, he was the chairman of the Federal Reserve. And he faced a problem very similar to what we're facing now. Inflation was out of control. The dollar was losing value rapidly. People were losing faith in paper currency. So, Volcker did something dramatic. He raised interest rates to levels that would be unthinkable today. 20%, can you imagine? 20% interest rates. And you know what happened? It worked. It crushed inflation. But it also crushed the economy. It caused a severe recession. Unemployment skyrocketed. Businesses failed. It was painful, really painful. But it saved the dollar. It restored faith in the currency. Now here's the question. Can they do that today? Can they raise rates to 20% when the government is drowning in debt? When every percentage point increase in rates costs hundreds of billions in additional interest payments? When the entire economy is built on cheap money and low rates? The answer is no, they can't. They're trapped. They have to keep rates relatively low, which means they have to keep printing money, which means the dollar has to keep losing value. It's not a conspiracy theory. It's just math. Simple, unavoidable math. And the smart money knows this. That's why they're buying gold. Because gold is the one thing they can't print. It's the one thing that maintains its value when currencies fail. It's the one thing that's been money for longer than any government has existed. Let me give you another perspective on this. Think about the BRICS nations: Brazil, Russia, India, China, South Africa. These countries represent billions of people and a massive portion of global GDP. And they're actively working to create an alternative to the dollar-based system. They're talking about a new currency. They're talking about settling trade in their own currencies. They're talking about backing their currency with gold. Now, whether this succeeds or not is almost beside the point. The point is that the world's largest economies are openly discussing moving away from the dollar. They're preparing for a world where the dollar isn't the global reserve currency. And when that happens, when the dollar loses its privileged position, all those dollars that are currently held overseas are going to come flooding back home. And when they do, the inflation we've seen so far will look like nothing. Here's something else that's not being talked about enough: the paper gold market versus the physical gold market. See, there's this thing called the COMEX, the commodities exchange where gold futures are traded. And on paper, there's a lot of gold being traded, billions of dollars worth every single day. But here's the dirty secret: most of that gold doesn't actually exist. It's paper contracts, promises to deliver gold. But the actual physical gold backing those contracts is a tiny fraction of what's being traded. It's like a bank that takes deposits, but only keeps a small percentage of cash on hand. It works fine until everyone wants their money at once. And right now, more and more people are asking for physical delivery. They're saying, I don't want a paper promise. I want the actual metal. And the system is starting to strain under that pressure. There have been reports of delays in physical delivery, reports of premiums for physical gold over paper gold, reports of shortages at refineries. These are the early warning signs of a system under stress. And when that system breaks, when people lose faith in paper gold and demand physical, the price is going to do something that'll shock everyone who isn't paying attention. Now, I want to take a quick moment here because this is important. If you're sitting on $100,000 or more in retirement accounts, there's something you should know about: gold IRAs. It's a way to get physical gold into your retirement account without triggering taxes or penalties. I put together a free guide that explains exactly how it works. It's in the description below. No pressure, but if you're concerned about protecting your retirement savings from currency debasement, it's worth looking into. All right, back to what's happening in the markets. Let's talk about silver for a minute, because silver's story is even more interesting than gold's in some ways. Silver is both a monetary metal and an industrial metal. It's used in solar panels, electronics, medical equipment, batteries, you name it. And the demand for silver in industrial applications is exploding. We're talking about a supply deficit that's getting worse every year. But here's the kicker. silver is still trading at prices that don't reflect this reality. The gold to silver ratio, which historically has been around 15 to 1, is currently way out of whack. That means silver is dramatically undervalued relative to gold. And when that ratio corrects, and it always corrects, silver is going to move in a way that'll make gold's gains look modest. Think about what happened in the early 80s. Silver went from around $5 an ounce to $50 an ounce in a matter of months. That's a 10 times return. Now, I'm not saying that's going to happen again, but I am saying that the fundamentals for silver right now are stronger than they've been in decades. The supply deficit is real, the industrial demand is real, and the monetary demand is starting to wake up. Here's another angle most people miss: mining production. Gold and silver don't just appear out of thin air. They have to be mined, and mining is getting harder and more expensive every year. The easy deposits have been found. The low-hanging fruit has been picked. Now miners have to go deeper, work in more remote locations, deal with lower-grade ore. All of this costs money. Lots of money. And here's the thing. At current prices, many mining operations are barely profitable. Some are operating at a loss, hoping prices will rise. But if prices don't rise, these mines will close. And when they close, supply drops. And when supply drops while demand is rising, well, you don't need an economics degree to figure out what happens to price. But there's another factor that's even more important: the time lag. It takes years, sometimes a decade or more, to bring a new mine online. From discovery to production, you're looking at massive capital investment and a long timeline. So even if prices spike tomorrow, even if mining suddenly becomes incredibly profitable, it'll be years before new supply comes online. That creates a situation where price can run much higher and stay there much longer than most people expect. Let me tell you about what happened in 2008, the financial crisis. Lehman Brothers collapsed. The stock market crashed. Real estate imploded. It was chaos. And in the immediate aftermath, gold actually dropped. People needed cash, so they sold everything, including gold. But then something interesting happened. As governments around the world started printing money to bail out the banks, as they started running massive deficits, gold began to climb. And it climbed for 3 straight years, nearly doubling in price. Now look at what's happening today. We've had even more money printing than in 2008, even larger deficits, even more debt. But this time, gold didn't wait for the crisis to pass. It started climbing while the crisis was still unfolding. What does that tell you? It tells you that the market is learning. It's not waiting for the inevitable response to the crisis. It's anticipating it. It's pricing in the money printing that everyone knows is coming. And here's where it gets really interesting. We're not just dealing with one crisis. We're dealing with multiple overlapping crises. A debt crisis, a currency crisis, a geopolitical crisis, an energy crisis, a supply chain crisis. Each one of these individually would be enough to drive people toward hard assets. But all of them together, we're in uncharted territory. Think about the debt situation for a moment. The United States government is now paying more in interest on its debt than it spends on defense. Let that sink in. More on interest than on the entire military. And rates aren't even that high by historical standards. What happens when they have to refinance all that debt at higher rates? What happens when the interest payments become so large that they crowd out everything else in the budget? There are only 3 options. They can cut spending dramatically, which is politically impossible. They can raise taxes dramatically, which is economically destructive and also politically difficult. Or they can print money to pay the interest, which is the path of least resistance, but also the path that destroys the currency. Guess which option they're going to choose. This is why gold matters. This is why physical precious metals matter. Because when the currency is being debased, when the purchasing power of your savings is being eroded, you need something that holds its value. You need something that can't be printed. You need something that's been recognized as money for thousands of years. Now, I know what some people are thinking, but what about stocks? What about real estate? What about crypto? These are all valid questions. Let me address them. Stocks can be great, but stocks are denominated in dollars. If the dollar loses half its value, your stocks need to double just for you to break even in real terms. Plus, stocks are claims on companies, and companies can fail. They can be mismanaged. They can be disrupted. They're not a store of value in the same way that physical gold is. Real estate? Real estate can be excellent, but real estate requires maintenance. It requires property taxes. It requires insurance. It's not liquid. You can't sell a bedroom when you need cash. And in a real crisis, real estate can be confiscated, taxed heavily, or become impossible to sell. Gold is portable. It's liquid. It's recognized everywhere. Crypto? Look, I'm not anti-crypto. But crypto is still relatively new. It's volatile. It requires technology to access. It requires electricity and internet. And most importantly, it hasn't been tested through a real systemic crisis. Gold has been tested through every crisis in human history. It's survived the fall of empires. It's survived currency collapses. It's survived wars and depressions and hyperinflations. That track record matters. Here's something else that's crucial to understand: the difference between nominal returns and real returns. Nominal returns are what you see on paper. Your account went up 10%. Great. But what if inflation was 12%? Then in real terms, you lost money. You lost purchasing power. This is the trap that most people fall into. They focus on nominal gains while their real wealth is being eroded. Gold doesn't give you nominal gains in a stable currency environment. That's not its purpose. Gold's purpose is to maintain purchasing power over time, to be the constant in a world of variables, to be the anchor when everything else is floating away. Let me give you a concrete example. In the early 1900s, an ounce of gold could buy you a nice men's suit. Today, an ounce of gold can still buy you a nice men's suit. The gold didn't change. The suits didn't fundamentally change, but the currency changed dramatically. That's the power of gold as a store of value. Now, here's where we are today. We're at a point where the people who control the money supply are buying gold at record levels, where the fundamentals for precious metals are stronger than they've been in decades, where the risks to paper currency are higher than most people realize, and where the average person is still almost entirely in paper assets. This is the opportunity. Not to get rich quick, not to make a killing, but to protect what you've worked your entire life to build, to ensure that your savings maintain their purchasing power, to have a portion of your wealth in something that can't be printed, debased, or inflated away. Think about your retirement. Think about the money you've saved. Think about what that money needs to be able to buy in 10 years, 20 years, 30 years. Can you really trust that paper currency will maintain its value over that time period? Can you really trust that the people printing that currency have your best interests at heart? Or does it make more sense to have at least a portion of your wealth in something that's been money for 5,000 years? Something that central banks are buying? Something that's maintained its purchasing power through every crisis in human history? Here's what the wealthy understand that most people don't. Diversification isn't just about having different stocks. It's about having different types of assets. It's about having some of your wealth in things that move opposite to each other. When paper assets are doing well, gold might be flat. But when paper assets are in trouble, gold shines. That's the balance. That's the protection. The wealthy have always owned gold. Always. Go back through history and you'll find that the people who preserved their wealth through crises, through wars, through currency collapses, they all had one thing in common. They owned physical gold and silver. Not paper promises, not certificates, not ETFs. Physical metal that they could hold in their hands. And right now, we're at a point where that strategy is more important than ever, because the risks are greater than ever. The debt is higher than ever. The money printing is more extreme than ever. The geopolitical tensions are more severe than ever. All of these factors point in one direction, toward hard assets, toward real money, toward gold and silver. Let me paint you one more picture. Imagine it's 5 years from now. The dollar has lost another 30% of its purchasing power. Inflation has remained stubbornly high. Interest rates are still relatively low because the government can't afford to raise them. The stock market has been volatile, with big swings up and down. Real estate has been mixed, with some areas doing well and others struggling. But gold has steadily climbed, not in a straight line, never in a straight line. But the overall trend has been up, way up. And the people who bought physical gold and silver years ago, when everyone else was dismissing it, they're sitting pretty. Their purchasing power has been preserved. They can still afford the things they need. They're not worried about their retirement. They're not stressed about inflation. They made the smart move when it mattered. Now imagine the alternative. You did nothing. You kept all your wealth in paper assets. You trusted that the system would work itself out. And now, 5 years later, your savings buy significantly less than they did before. Your retirement plans have had to be adjusted. You're worried about the future. You're kicking yourself for not taking action when you had the chance. Which scenario do you want to be in? Because the choice you make today determines which scenario becomes your reality. This isn't about fear. This isn't about panic. This is about being smart. This is about understanding what's happening in the world and positioning yourself accordingly. The central banks are buying gold for a reason. The wealthy are buying gold for a reason. The smart money is moving into hard assets for a reason. They see what's coming. They understand the math. They know that paper currency is on a path that only ends one way. You have the same information they do. You have the same opportunity they do. The only question is whether you'll act on it, whether you'll take the steps necessary to protect your wealth, whether you'll turn your paper money into real wealth before it's too late. Because here's the thing, there's a window of opportunity right now. Physical gold and silver are still available. Premiums are still reasonable. You can still get your hands on real metal without paying massive markups. But that window won't stay open forever. When the masses wake up to what's happening, when everyone rushes for the exits at once, that's when premiums explode. That's when delays happen. That's when it becomes difficult or impossible to get physical metal at any price. The time to act is when you don't have to. The time to prepare is before the crisis, not during it. The time to protect your wealth is now, while you still can, while the opportunity is still available. So, here's what I want you to do. Take a serious look at your financial situation. Look at how much of your wealth is in paper assets. Look at how much is in things that can be printed, inflated, or debased. And ask yourself if that's really where you want to be. Ask yourself if you're comfortable with that level of risk. And if the answer is no, if you realize that you need to make a change, then take action. Do your research. Learn about gold and silver. Understand the difference between paper and physical. Understand the role that precious metals can play in protecting your wealth. And then make a decision. Make a plan. And execute that plan. Because the smart move isn't to wait and see what happens. The smart move is to position yourself now, before everyone else figures it out. The smart move is to turn your paper money into real wealth immediately. Not tomorrow. Not next month. Not when things get worse. Now. Your future self will thank you for the decision you make today. The decision to protect what you've worked so hard to build. The decision to own something real in a world of paper promises. The decision to be on the right side of the greatest wealth transfer in history. This is your moment. This is your opportunity. Don't let it pass you by.